Aloha everyone, Joshua Hayes at BigWaveTrading.com. I hope you're having a lovely weekend. Heading into Monday, the stock market continues its range-bound trading. There are multiple resistance levels. We're just looking at the S&P 500, the 50-day moving average, the downtrend line connecting these highs right here, this resistance level here, and this resistance level right there. There's an uptrend line here, the 200-day moving average, this support level, and this support level. That is a definition of an extremely range-bound market. Within this range-bound, it's pretty ugly. The red bop, the distribution, the no accumulation, not good. If we roll over and break down, we're going to probably break down significantly. So just make sure those stops are exactly where you want them. And it really kind of doesn't matter what you look at. If you look at the QQQ, you can see that isn't really full of accumulation in green bop, is it? Or even just yellow bop? Does that look like a good consolidation to you? No. Does it mean it has to break down? No. We could easily resolve ourselves higher. It looked ugly back here even. Minor compared to this now. But back here it looks kind of ugly, like we were going to roll over. And as you can see, we moved higher. So anything is in the cards. The DIA doesn't look as bad, but still, it's not really a chart I get too excited about. And the Russell 2000 IWM looks a little bit better, and it's what gives me hope as the Russell 2000, the New York Stock Exchange Advanced Decline Line, my personal portfolio of long positions, and the Perfect Speculator Scan continue to hint that we could resolve our way higher. But at the same end, the indexes look terrible, the big cap stocks look terrible, and my green bop scans, where I look for max green bop for the past 5 days or green bop in aggregate in the past 20 days, they do not look good. They are full of just micro-cap illiquid stocks. The stocks that are highly liquid in there are choppy, do not look actionable. And the BOP 20 scans, the green BOP is going in the wrong direction towards yellow and red, not towards max green. For instance, it's doing this. It's not doing this. Most of them are doing that. Now, we can always turn around, but right now, very, very, very range-bound, very, very random, wild intraday action. So, for right now, my priority still, if you can do it, intraday trading, the stocks that are hot, below 10, high volume, pre-market, the right proper catalyst, news flow, earnings winner, contract winner, billionaire investor, float rotation, sector plays like the Bitcoin plays lately, like DPW. So you always just want to stick to those right now intraday if you know what you're doing, and or those SPY options. Those SPY options regularly that I play. I tried to play some on Friday. I had to cut my losses. I tried to do a green to red, from green back to green, green to red, red to green play whenever the indexes went red and then turned to move higher after going green again. Had to cut my losses, tiny losses. For every tiny loss of 10 to 20% that I have in the SPY trades, there's moves of 100 to 200% in the put options, 50% to 100% regularly in the call options as we've been in this trading range. So continue to stick there. If you're doing it on an end-of-day basis, you can either be in all cash here, waiting for me to give you the all clear signal, increase size per long position, or you can continue to do what I do. Take the long signals that trigger, cut your losses at 2, 3, 4, 5% of the ones that are wrong, and then every once in a while, not every once in a while, more often than not, we're going to get an R fill that moves up 26% in right around 2+ weeks. We're going to get an OMEX that moves up 32% in 1+ week. So as long as stocks are doing this, and even though I don't have a lot of stocks that are doing this, I still have the vast majority of the stocks that I'm going long. They're either trending higher or moving sideways. Very few are failing, and if they're failing for tiny, small cut losses. And then when you got stocks like this working, or they got HLG hitting new highs still after Friday's session, INGN hit new highs, USPH also hit new highs. I'll review all them this weekend on social media. It's kind of hard to be too bearish here. So as long as that's happening, I'm taking new long positions. But before we go there, some house cleaning. Another sign that this market might not be as bad as we think. I only had 3 end-of-day full sell signals. Momo is a 100% sell signal. It's closing below this low a day right here on heavier above average volume, with BOP continuing its trend towards negativity. So Momo is a full sell signal. I think we're leaving there I'm already out with a 7.65% loss, so 8% loss. I was knocked out intraday that day right there, so I haven't had Momo for a while. ZG, a 50% sell signal on an end-of-day basis, closing below the 20-day moving or 50-day moving average on above average volume in red bop. You want to move half of your stops like I will to here. My final stop is right here. So I've got some tight stops here. I could probably have half here, 25 here, 25 here, but I just said screw it. I got 50% here, 50% there on my remaining ZG position. We'll be leaving that half of the trade with a 21% gain if you do it on an end-of-day basis. And then BXG is closing below its 20-day moving average on heavier volume the session before. Doesn't need to be above average considering that we're erasing the small gains that we had. Going to be leaving now with less than a 1% loss, but the BOP has also gone negative, so that's just not good. Obviously, with the way that this chart looked, I wanted it to continue to move higher and keep its green BOP. Hence, it lost its green BOP catalyst. Now closing below 20-day moving average. Start getting out of it. So 50% of my stops get moved to right here. I currently will then have 25% here and the final 25% right there. So 25, 25, 50 for BXG. Now for new long positions, there was only one brand new long position, Send. Send triggered in my Can Slim quality scan. It was then confirmed in my IPO scan and then confirmed again in my max green BOP for the past 5-day scan. I've been interested in Send ever since here. It is now up 4.67%, so it appears that I'm chasing it just a little. However, I got the 50-day moving average right there, and I got multiple support levels. So 2% of my account capital, 1% for Can Slim, 0.5% for being an IPO stock as a confirmation signal, 0.5% for that max green BOP for 5 days, total of 2% of my capital. Limit order 27.56, the high of the day, since it's not extended from the 20-day moving average. First cut loss 26.50, then 25.52. Then 24.58, then 23.76. Remember, it fails the 50-day moving average on heavier volume and or what the hell am I doing? And or loses its green BOP. We'll be consolidating. I will be consolidating and moving stops up higher immediately. You should also. Do not let these things go to their final recommended cut loss level. If they lose their catalyst, heavier volume pullbacks, losing green BOP, got to start getting rid of Send. Now, ad signals. Pretty good, darn good one here in CBAY. SIGA, it's an immediate ad signal after new long position following an intraday dip. And then BSTI is basically a buyback ad signal for me as I was shaken out of a little bit here as my first stop was here, shaken out here. So getting back, the best one probably overall is CBAY, perfect speculator quality stock. Want to get long 1350 limit order since it's extended. I will be using 3 stop levels. 1282, 1139, and 1049 on this ad signal for CBAY. Now, my final stop on CBAY, I had it pretty tight, was right here, so I was completely shaken out of CBAY here. So this is going to be a completely new buy for me, but on an end-of-day basis, it's just the ad signal for CBAY. But this is probably the best looking chart. There's no red BOP in it, so you know I always like that. There's no red BOP in Send either, but Send hasn't traded for a full 9 months yet, so that always catches my eye. SIGA, perfect speculator quality stock, was also confirmed in my tertiary scan, so it's definitely a good ad signal. First cut loss level obviously still right there at 990 from the first ad signal. Final cut loss is still 949. My limit order will be the high of the day, 629. I forgot to tell you, there's always so much to go over. CBAY, 1% for perfect speculator quality. Since it's an ad signal, 0.5%. Since it's extended, it's supposed to be just 0.25%. But since I'm buying it back, 0.5% of my personal account capital. SIGA, perfect speculator, 1%. Ad signal, 0.5% of my account capital. Limit order 629. Once again, first cut loss 594. Final cut loss 560. And then BSTI, this is a ad/buyback signal. This would be a hard quote, quote, ad signal if BOP would have continued to trend higher. But that theme I keep telling you about has a strong move on heavier volume, pocket pivot point signal, and something that used to never happen before 2008. It did sometimes, but not like it does now. Somehow, BOP went lower. If you saw a day like this on heavier volume, especially if it was above average, you can guarantee you probably have BOP going to max green BOP, have a pretty solid signal that you could be confident that you can increase your capital size into. But as it is, it's an ad signal. IPO scan only, confirm nowhere else. 0.5% of my capital, limit order 1029. First cut loss 990. Final cut loss 949. All right, everyone. I'll see you in the chat room on Monday. Aloha.